Welcome to Focus on Fuels, brought to you by StoneX. Your hosts are Trevor McClanahan, Risk Manager, and Alex Fodes, Director of Market Strategy from the StoneX Energy Desk. Alex and Trevor help fleet managers, fuel buyers, and energy procurement specialists gain control of fuel costs, boost margins, and keep their businesses competitive. Join them for another deep dive into the volatile energy markets.
Remember that the trading of derivatives such as futures, options, and over-the-counter products or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss. Past results are not necessarily indicative of future results.
Hey everybody, welcome back to Focus on Fuels. I'm here with Trevor McClanahan and I am your host, Alex Fodes.
How's it going, man?
Pretty good. So I'm back. I was out of town this week in sunny Scottsdale, so I came back to some rainy weather here in Kansas City. So a little bit depressed, but back to kind of the regular swing of things.
Yeah, we got some good weather here at least, other than the rain.
Yeah, and just, I don't know if it beats 85 by a pool, so I don't know.
It's the reason why that place is a retirement
Yeah, absolutely.
destination versus Kansas City.
Yeah, let's talk about kind of what's happened since we last were on. I think tariffs were a little bit fresher when we initially came on.
More aggressive at the time.
Mm-hmm. And I think that's kind of been dominating the market, but we've seen some rebounds in crude oil pricing and refined product pricing since then, but we're still not kind of marching up over any big moving averages right now.
I think, and one thing we're kind of running into that resistance of 65 bucks a barrel. That was over 2 years of support for a long time. And now it's acting as kind of the inverse of that and acting as resistance. So it's going to be hard for crude to get over 65, in my opinion, until there's more clarity on the tariff situation. But, at the same time, there's a lot of risk in both directions, in my opinion, in this market.
Yeah, I think one thing that what I would think is that there's some risk to the downside, I believe, is being maybe a little bit more priced in than the upside. So I do think we're still closer to our bottom than the top.
Mm-hmm.
But yeah, I agree. There's not really a catalyst that's moving us higher. I think a lot of the data agencies recently came out with their estimates of global oil demand, which came actually very close to what we were predicting, around 400,000 barrels per day. That's basically exactly what the EIA forecasted.
Good call there, buddy.
Yeah, so they must have been reading our stuff.
Yeah, that had to be it.
So I think overall that's not a huge amount of demand destruction. I mean, it's not nothing, that's for sure.
Yeah. But
I think a lot of people are still kind of waiting for that 90-day pause on all the tariffs also. So we're kind of just in this mode where some people appear to be kind of waiting to take a position.
Yeah.
But
yeah, I've viewed, I guess the reason why I say there's a lot of risk in both directions would be mostly due to the fact that we've got two different things going on at once. From the supply perspective, OPEC, it seems like things are kind of not necessarily falling apart, but definitely losing their grip a little bit, just internally too. Kazakhstan, that's been the big news this week. And then also obviously the tariff news, and there's a lot of development on that. But just to focus in on the supply side, Kazakhstan's been non-compliant with OPEC for pretty much the entire time they've had these cuts. And they're saying basically they've been overproducing by about 300,000 barrels per day. And they're basically just outright said this week that they're never going to be able to come within compliance there due to the fact that their wells are producing that, and there's no way of shutting those down without destroying the well itself. Mm-hmm. So they pretty much said, hey, we're going to just continue to overproduce regardless of what the quotas are. And we're just going to, deal with the repercussions, ask for forgiveness later, right? Well, now that that's starting to catch up with them, and Saudi Arabia and really the rest of OPEC members as well. They're taking a lot of notice of that. So really, the next OPEC meeting, they just increased production by 411,000 barrels per day earlier this month. The next, and that starts in May, and then the next, their next meeting is May 5th to decide on June's production level. And kind of the status quo of that was, we kind of figured is just going to be another 138,000 barrels per day on top of what that 411 looks like. But more than anything, I think the big thing to really focus in on here is the rhetoric and just the sentiment of what OPEC's, the leaders within OPEC are thinking right now. Because I don't know necessarily we need to hit sound the alarm on, some sort of price war. But it definitely is on the table, and the more disgruntled there are internally there, the more of there is a risk to that. So, I still think that crude's got a good, strong floor at $60 a barrel just on the supply, just based off producers not having their break-even prices. However, with that being said, it's going to take time if there is a price war for that to kind of catch up with itself.
Yeah, I think that you nailed it on the head there with it's more about how the group is handling the market dynamics currently. Because previously, and we have stated it as well, they were defending a specific price, it appeared.
Mm-hmm.
And now with all of them kind of holding back so much supply on the sidelines, I'm sure Saudi Arabia and UAE are going to be like, okay, well, if they're not going to listen, then perhaps we can crank up our taps as well, or we need to get a little bit of piece of this as well.
Yeah.
And another wrench in the plan for Kazakhstan is a substantial amount of their crude production is handled by some of those foreign major companies too.
Yep.
So
good point.
They're not always under the state-run organizations. I'm sure there can be some discussions made amongst them, but yeah, if those wells, they can't really turn them off at right now. It seems like that excess 300,000 barrels per day is here to stay, and perhaps that increase. So there's a lot of debate about why they did the increase all of a sudden.
Mm-hmm.
Perhaps it is to kind of save face and be like, yeah, no, we're actually increasing our production just so Kazakhstan can look like it's perhaps, being compliant. Although,
yeah, that's kind of the weird thing to me though, is like when they came out with the last announcement saying that the 411,000 increase. Okay, that would make sense. So what you're saying, so it just basically saying we're going to increase it just to meet to the point of what production levels are now.
Mm-hmm.
So yeah, that could definitely be the case.
It's a guessing game. We don't want to just sit here and base everything on what we think and because ultimately that group, there are others that have more of a pulse on that group specifically, but nobody outside of Saudi Arabia is going to actually know the true ins and outs of what they're thinking.
Mm-hmm.
But you do bring up a good point that it appears that the risk of a price war or just opening of the taps of OPEC has definitely increased over the past several weeks, I would say. So we'll kind of see, and that is a price risk to the downside. And so, we've got that, but then we do have a supportive floor for crude oil production. We are expecting to see some actual slowing of this already from the price, the $15 price sell-off. We should start seeing this in the shale patch.
Mm-hmm.
I believe I've been reading about and seeing some signals that this is actually slowing. So I think that's something that's going to be supportive going forward. And already, we've kind of gone back and forth of the initial estimates where there's going to be a global recession. Like that's no doubt's going to happen. And then now I feel like the sentiment's perhaps shifting a little bit back of like, okay, let's hold up.
Yeah,
perhaps this is not the case.
Right. And it just comes right back to tariffs, and I think that the best way to look at those that progress there is just, I mean, obviously there's already been a shift of sentiment. The Trump administration's already softening up some. And I think that there's a lot of deals that are getting close. Like India, I've heard a lot of chatter about them already coming to some sort of verbal agreement. Nothing inked yet, but there seems to be a lot of progress there. And if they are able to get a deal done, that could create like a template basically for other countries to kind of work off of. And I do think there's going to be, a lot of changes between every country as far as how the Trump administration views them. But with that being said, if they get one deal inked, I do think that will kind of cause a ripple effect, and even just starts that momentum of more deals being done.
Mm-hmm.
I still think China is going to be probably a little bit more of a longer game, but I do think that their tariff reduction or the tariff percentage is going to reduce significantly over time, and that'll soften things up, and then also help the S&P and stock market in general.
I think some of these deals will take a long time. So even if something really truly doesn't get inked, all it takes is a headline, right?
Yep.
So that's like we've already baked in almost the worst case scenario of this tariff war at some point. And so when we're kind of making any progress at all that's worthy of a headline or a tweet, that could move the market as well.
Yeah.
I think recently one thing to kind of pay attention to, and more of a supply risk to the bullish side, is are the sanctioned countries that we still have yet to see any barrels really being removed from the market.
Mm-hmm.
It's kind of the likelihood of that actually following through seems to be kind of fading, but now it's like, is there more focus on Venezuela actually than Iran? But I think the Trump administration still wants to put pressure on Iran just to get some agreement done. So like, what was it, last Saturday was when the groups met, and then there was a headline that some progress was being made between the two. And then today we see a headline and it says that the Trump administration is putting maximum pressure on Iran and now going towards its LPG exports.
Yeah.
So you're kind of, I just don't buy into the hype of when there's a nuclear deal being done. I think these sides are still pretty far apart.
Yeah. Yeah. I mean, I think ultimately the Trump administration is just like, we're not allowing you guys to enrich uranium above the level to make a bomb, right? And Iranians just don't like that. They've got that Libya story in their head where they did this. U.S. has made the same deal with Libya and then Gaddafi, and it's got a lot of in the same region too. So there's just too much of that that's fresh in everybody's mind in the Middle East. And Iran's got that on their mind. So it's just I just think it's going to be really hard for them to come to an agreement because one side's got, like you just said, I mean, they've got totally different views. Trump administration saying absolutely zero tolerance, no bomb. Iran's got the opposite, and they know that all their cards kind of sit in that. You don't have a strong hand in the global.
Exactly.
On the global stage when you don't have a nuclear weapon.
Exactly. And I think that's the main thought process there. It's, you look at other nations that have nuclear weapons. North Korea was very relevant for, their GDP. Bingo. And why is that? It could be because they have nuclear weapons. So, more potential, and kind of helps you sit at the negotiating table to some degree. So I think that's definitely, there's just, these sides are very far apart. So I doubt anything will actually happen. And
this podcast will come out after the negotiations. There's more negotiations that are going to happen on Saturday, and today's April 24th. So there's going to be, once this comes out, there'll already be probably some news on that front. But in our opinion, I just don't really see a lot of potential for progress, but we could be wrong by the time this comes out.
And even if there were a deal to be made, it shouldn't change the supply dynamics of Iran. They're already growing. They've been growing their production and growing their exports over the past several years. So
Right. But I mean, if they don't get to an agreement, and then now we're looking right back at what we were looking at is like, okay, how strict are these sanctions going to
yeah,
be, and how well will they actually perform? They've shown that they've worked in the past. There's a lot of reasons to not believe that they will work going forward, though, just because it's a different. They have evolved and
mhm.
figured out ways of getting their
And the
oil
buyers,
on the market.
the
Yeah,
buyers are
and that's
different
probably
this
the
time
biggest
around,
aspect.
right?
Yeah.
So last time, a lot of the Western powers were the majority buyers of Iranian crude. So the U.S. had a lot more pull of being like, okay, we can all team up and stop buying Iranian crude. Now it's China, so China and India. So it's a little like whether we're able to actually enforce these and whether the administration's willing to are really the questions here.
Yeah, and I don't really see like India or any kind of tariff agreement being hinged off of some sort of a compliance with the tariff or the sanctions themselves. I don't think that's real. That's a possibility, but kind of why I said it. But I don't think that's something that
Mhm.
could really happen. And I think ultimately, like Trump even wants oil prices to be lower too. So it's like to some degree, it's okay for him to let it seep into the market to some degree.
Yeah, and I think it will. Yeah, it's just going to come down to what the administration wants to truly enforce.
Yeah.
And it just changes every week because the Venezuela news was a little bit hot there for a bit, and that's kind of faded.
Yeah.
And we have yet to really see loading slow there as well. Although there were headlines that loadings to Chevron in the U.S. had been halted, which was about 250,000 barrels per day. So,
hmm
I mean, if there is any progress made here, that's definitely a risk, but
Right. So
it's just something you need to pay attention to. But it's hard to put that into a forecast and be very firm about what's going to actually happen until you see it fundamentally.
yeah, so there's a ton of moving parts in this market right now, and I don't have a lot of conviction in either direction. I think I do think it will be hard for crude to get over WTI. That is, get over $65 a barrel. That's kind of that big momentum shift if we are able to get through that. That'll act as support again, I would assume, if we are able to break it. But I think there's going to be a lot of sideways action until there's just more development on all of these moving parts that we just discussed. That's my opinion, at least.
Yeah, I think so. Utilizing kind of the models that we have in house, it's aiming towards a $68 barrel of crude for Q2. So that is a little bit elevated from where I would expect it to be. But,
Yep.
we try and keep emotions out of it. And that's where kind of fundamentals are pointing and suggesting at this point. But, that's not to say all at the end of the day, it's just a model and forecast that we have there, and things change.
On data that we know.
Yeah.
Yeah, everything that we know is pointing towards that. But WTI is still in steep backwardation, showing that the market still remains tight. Demand, actually, I wanted to point that out. DOE report showed gas demand was at 9.4 million barrels last week. That's really strong. That's up 1 million barrels from the previous week. Now, a lot of that will be Easter, right? So Easter demand is going to seep into that, of course. So don't expect that to sustain by any means. But seeing that number that high, though, it actually is a strong, it's just a strong stance on where oil is right now and the strength of demand domestically. Now the price is lower on gasoline. People are willing to get out and drive a little bit more. So, with all the inflationary risk and tariff risk at bay here, still seeing strong demand. So I think that's a good sign.
And I think that was honestly pretty surprising on gasoline front because we had been showing a little bit weaker demand in March.
Absolutely.
And inventories were closer to the higher range of their 5-year seasonal average, and now we're back down to the lower end. So it's kind of like flip things a little bit, but obviously week to week data, it's hard to build too much into that. And honestly, when you look at where price is, that's the ultimate takeaway of what the market is pricing in, So, but I think you're right. We've found this kind of a lower price range that there's some stability there and some support from selling off too harshly. And I believe they just announced the durable goods, or it was new orders. I think that's what it was. The ISM new orders just came in a little bit higher than expectations. So, we have yet to see a slowing of industrial activity. This is going to be kind of a slower moving thing.
Sure.
So, it's not,
that's something to monitor, but it's probably
Yeah.
going to not really take a lot of substance really until we get later, probably in the summer, honestly.
Mhm. And that's going to be, we'll probably start seeing that's when really gas demand kind of takes the front headline. So we'll see a little bit more about that going forward. But really, I think those are the major movers in the market. Propane, we've talked a lot about that, more so than usual, just because it's been kind of front and center at the tariff
it's been really strong.
Yeah, and it's held up substantially stronger than what was expected.
For our buyers, it's kind of in a rock and a hard place, because the percentage of propane to crude is really high right now, and it's not screaming buy at all. But crude's down in the low 60s, so it's like, how long does that last? And if we get to that price target that you mentioned at 68, that changes the entire scope of what propane looks like. I do think it's going to weaken in comparison to crude at some point, but I do think that if crude stays lower here, that's ideal. But if it rallies in the face of propane, it ultimately could get back in the 80s pretty quick for the winter strip there.
Yeah, and I think we'll still see some downward action.
I do too.
And we could see some weakness even in the face of a little bit more support WTI. I think going forward, we will see some more sideways to upward price action in WTI, but I don't know if we rip higher.
It's just going to depend. I mean, it's so headline driven right now that so it's hard for us to make a really good assumption on that. But yeah, to me, I would agree with you. I think there's more downside risk in propane specifically than upside right now.
And the rest of the barrel, though, does seem more attractively priced when you look at just 5-year averages. And honestly, when you don't have much conviction of where the price is going and what the market's kind of telling us, that's one way to look at it, is just compare this to history, to recent history. And crude at $60 per barrel is pretty attractively priced. So, looking at prices for either the end of this year or next year, that's going to be, I believe, when we kind of start to see more strength in the market, because I think we might have push a little bit higher here because we might be overdone on the selling, but I don't see a strong end of the year in 2025.
Cool.
Yeah, I think that's all we have to say today. I put together a webinar last time we spoke. I believe was that 2 weeks ago? 2 weeks ago. So last week, I released a webinar that was kind of the rest of the 2025 outlook. We have a recording, and we will attach that here in the show notes. So please watch that. If you'd like to have kind of a more in-depth dive, look at some of our charts we put together, some of our models, and kind of, take some actual quantitative data as opposed to just Trevor and myself talking about where markets are going.
Yeah, and he has the white paper on the tariff situation as well, what the effects of that are, and again, taking more of a quantitative look on what the effects of that are. So be sure to check that out, because it's a really good information and very relevant still. So I think that's all we got today, guys. Well, thank you guys for joining, and let us know if you guys reach out anytime if you have any questions or have any kind of interest in looking at opening an account with us.
Thanks,
guys.
You've been listening to the Focus on Fuels podcast with Trevor McClanahan and Alex Hose. brought to you by StoneX, NASDAQ ticker SNEX, a global Fortune 100 financial services company with a century of commodities risk management experience. Subscribe to Focus on Fuels on your preferred podcasting platform. For insights on managing fuel and energy price volatility, and to sign up for the free StoneX Morning Energy Brief newsletter, email focusoonfuels@stonex.com or visit www.stonex.com. Please feel free to rate, review, and share this episode with colleagues. Until next time.